Kranthi Bathini joins us this morning to help us understand what's really going on, Kranthi. Some people believe that that it is the FPI exits which are weakening the rupee, while others say that it is a weakening rupee which is leading to FPI outflows. Which is the chicken and which is the egg here?
Definitely, Kartik. The foreign portfolio investors have been the continuous sellers. They have sold a tune of around 2 lakh 90,000 crores YTD for this year. So that has been weighing on the rupee in the medium to short term. Definitely, the foreign portfolio investors' exit from Indian markets is a worrying factor for the markets. But thanks to the DIS, we have stand like a rock to protect the market at this point of time. DIs have been absorbing this selling pressure. That's how Nifty could able to hold on to this current range of around 26,000 level. Market could able to hold on. But still the foreign portfolio investors have been exiting the market on a daily basis. It's just like a continuous saga we have been witnessing at this point of time. That has been creating the pressure on the market. But thanks to the DIS, we could able to hold on to this level, and we are witnessing a consolidation phase, not any kind of a crash or a correction phase in the market.
Crash consolidation phase, but is it fair to assume at this point, Kranthi, that DIIs as well as retail investors are still bullish given the strong fundamentals of India, but given the weakening of the Indian rupee and no prospect or no sort of glide path for the US trade deal with India, is it fair to assume that foreign investors at this point are bearish, or would you say they're just sitting on the fence waiting for the deal to come through?
One thing, I think, as you rightly mentioned, the foreign portfolio investors have been sitting on sidelines. Even when I interact with the long-only foreign portfolio investors also, still they want to wait and watch measure at this point of time. One thing is, on a historical basis, the weakening of the rupee, one of the concerning factor for the long-term foreign portfolio investors. When I interact with any kind of a HNA who is sitting in outside India, a non-resident Indian who want to invest in Indian markets, when we present the India's strong domestic theme to them, Kranthi, what about the rupee depreciating? Today we are at 90, and if this keep on happening, so we need to get compensated in terms of the return. Okay, that's where the worrying factor for them. So this is the key area where foreign portfolio investors are watching at this point of time. Yes, of course. The trade deal overhang is also one of the key reasons for the FPIs to wait on sidelines at this point of time. Once we get the blueprint and a greater clarity with respect to the trade deal is concerned, because any foreign portfolio investor who want to commit a good amount of money to markets like India, they don't want any uncertainty. They want greater clarity, and they want to sit on sidelines despite of the strong macro story that's playing for the investors.
All right. Do you think, Kranthi, it's time for RBI to become a little more aggressive in managing this depreciation of the Indian rupee against the US dollar? Because it's not this time around, we are not picking up data around the US dollar becoming strengthened and hence the Indian rupee losing in comparison. Rather, even the dollar index shows that the US dollar is below the 100 mark right now. So in the interest of foreign portfolio investors, in the interest of overall India's imports, do you think there is now reason for RBI to become a little more aggressive in its forex management and open market operations to arrest this fall of rupee, which has now been lasting, what, more than about 10 days or so?
Kartik, it all depends upon the open market operations of RBI. Of course, RBI tried to intervene as and when it's needed, but not on a continuous basis. That's where RBI intervention is at this point of time. I don't think so. The aggressive intervention from the RBI also not needed at this point of time for some more point of time, because RBI have been making the open market purchases also they have been doing, and they are supporting some point of time. So aggressive measure may not be needed at this point of time, and make the market to determine the best price, and medium to short term some kind of exporters also going to get benefited. But by and large, RBI is closely watching the situation.
All right, RBI is watching the situation. Meanwhile, we are also watching the situation on the trade deal. In fact, a plethora of trade deals that India is on the verge of signing. Now, latest commentary coming from Commerce Secretary Rajesh Agarwal that India and US are very close to signing that trade deal. In the context of that news, are there certain sectors, Kranthi, that investors should look at more seriously right now? And given these dips that we are seeing, these little cuts that we are seeing in stock valuations, is it time to accumulate some stocks on the presumption that the India-US trade deal is likely to come through?
With respect to the trade deal is concerned, Kartik, the IT is the sector that gives greater clarity for the investors. So the sector to be on the watch list is IT, and the remaining sectors that are going to benefited, the gems and jewelries, the textiles. One need to be watchful among these stock specific movements are concerned. But IT, one can accumulate for a medium to longer term. Definitely, the trade deal can give greater clarity and greater positivity for the IT as a sector.
All right, and coming to the other trade deal, Kranthi, the India-EU trade deal, the FTA, which is under negotiation and likely to be completed any day now. I believe the signing is likely to happen potentially around the time that European leadership arrives in New Delhi for Republic Day celebrations. But keeping the India-EU trade deal in focus, do you think energy stocks is something that may not really work out favorably for investors given the high carbon tax, the CBAM, that EU is really concerned about India's exports?
Yes, there is a different kind of sectors like the textile, the pharma, and these are the sectors focused on the EU as a reason because they have a altogether different set of rules with respect to the EU norms are concerned. But the sectors to be focused can be pharma can be one of the important sector to be focused because of this deal, and also the textile and the footwear or the consumer. These are the centric sectors one can keep it on their watch list, and they are going to get benefited. Especially this sectors like textile looks attractive at this point of time if these trade deals go through.
All right, Kranthi Bathini, let's leave it at that this morning. Thank you so much. As always, pleasure having you here with us on News 9.